a very special guest is joining us on the show today, all the way live from Singapore. Pankaj Chopra, Shanti Advisors from Paris. Of course, he's based out of Singapore. Pankaj, good evening. Thanks a lot for staying back so late to interact with us all the way in Singapore. Let's talk about how you analyzed the commentary from Janet Yellen. And, in the same breath, after the event was over, Stanley Fischer came out and also calmed the market that perhaps a rate hike may not be in a hurry. And the result was that Asia was unruffled this morning, including India. What's your own analysis of that?
Well, firstly, thank you very much for having me on your show. It's always a pleasure to talk to you guys and share views. Now, coming back to the US, a very funny thing is actually happening. The positive is that, on one hand, we are worried that there will be a rate hike. There could be a rate hike. In my opinion, in our opinion, we believe that a rate hike actually is a good sign. The world actually needs interest rates to move up a bit. Where everyone is worried that the world is in unprecedented times of negative interest rates, a little bit of economy recovery in the US or anywhere else in the world will definitely help. Of course, in the short term, there is this worry about liquidity. But frankly, I'm not, we would be a little bit worried if the rate hikes don't come in early. If they do come in, maybe near term you'll have a blip in the emerging markets, but that will be the opportunity. But really, both the signs, if you look at the big picture, the emerging markets, especially India, is in a very sweet spot, both ways, whether there is a rate hike or if there is not. So if there is not, it will be driven hugely by liquidity. If there is, you won't have another one coming in soon in any case, because India remains the shining star. The gains that the Indian markets will do or the economy will do will be a lot more sustainable in that case.
You talked about how you'd possibly see a bit of a blip in emerging markets. That's the word you use. Should we actually see the US go ahead and raise rates this year, if that happens at all? But, what would you say to the fact that despite a very clear signal from Ms. Yellen on Friday that a rate rise is coming soon, today our markets have actually not only managed to sort of, outweigh the rest of the world, but also brave it. So in some sense, isn't that also a signal that we are resilient perhaps to some of these external shocks?
Yes, you're right. And that's a good analysis. But the fact remains that India is in the sweetest spot ever. I've spent so many years, decades, covering the Indian markets and the emerging markets. And I think the fundamentals of the Indian economy haven't been as strong ever. On the policy front, if you look at it, no policy which was expected earlier remains pending. GST is passed. The banks have done what they can do towards lowering interest rates. The debt market is kind of coming on. I think the ecosystem is set for India to do well over the next decade or so, barring some global surprises, which would again create blips, as I say. But again, they would be opportunities. What's worrying, I would say, at the moment remains valuations, because people are worried that they haven't seen these kind of valuations, and the growth or the underlying growth doesn't seem to be justifying these kind of valuations. But I think if you take a much longer view, I think these valuations can be justified to a certain extent. But you're right. There is always it pays to be cautious, and that's what investors are tending to be. But right. I would, to take the bigger picture, I think India is set for a long time of good times.
Sure, I can completely understand your optimism, Pankaj. But as an FII, we're talking to each other after almost 2 months now. Last time, you had indicated how, it's very important for the Indian stock markets to perform well over a period of time, that the interest rate trajectory heads lower. But between then and now, one development which has happened is that we have an inflation hawk at the Main Street once again, Mr. Urjit Patel, which may mean that the interest rate may not be cut at the same rate as the Wall Street would have wanted otherwise. What are your thoughts as an FII to this?
I think we can't be more pleased than this new decision of continuing of policy without any surprises. I think containing inflation actually sets the stage for a much longer term, much stronger economic upswing in India, which has to catch up with decades of decay. Now that's kind of will be left behind. So I think this and more. Let me not demean what or lower what Rajan has already done. I think he's put an institution in place. So really, the next it won't be an individual delivery anymore. But what we do know is having a CPI as the base. I think inflation will remain down. That will be targeted, and to that extent, I think that was the big bugbear for the Indian interest rate environment. And I think interest rates over the next 5-10 years will head lower, and that's exactly what India needs. I think on policy matters, whether it's political, whether it's on the manufacturing side, or whether it's on the monetary side, on the fiscal side, I think things are getting done. I don't think India's have had it as good ever in the last 4-5 decades that I've been tracking Indian markets.
Right. Pankaj, you talked about how a spot of bother, if I could call it that, is valuations. Do you believe that earnings will have to play catch up for these kind of valuations to sustain? What have you made of, fourth quarter corporate cards that we've seen so far? Do you believe that better days are not very far away?
Well, that's a nice question. The fact is that last quarter earnings were the past. I mean, they weren't up to mark, of course, and they were playing out the negatives of the banking sector, NPAs, the worries of the global markets, the sentiment being low, and a wait that eventually the consumer will start buying, infrastructure will start plugging in. Even now, the situation isn't as strong. I mean, we've seen that the consumers haven't, bit into the consumption cycle hasn't really taken off the way it should have. But really, that doesn't worry me too much. You talked about valuations. One very interesting bit about valuations is that if you look at the 10-year yield on the Indian bond, it used to hover near the 8%. It's now 7% odd. And that exactly is a huge driver of valuations per se. So although we may believe that the valuations are high, they aren't as high given that the underlying cost of capital has come down and is expected to come down even further in a less volatile environment. I mean, very simply put, India was known as a very high beta market amongst all our markets that we would invest in. Not anymore. I mean, the volatility is low, performance is better. I think emerging markets, especially India, is set to do much better in the coming future.
Pankaj, very quickly, you are someone as a investment management professional running money across emerging markets where India also is a piece. But when you compare, opportunities here in India compared to some other equally structurally strong emerging markets, Philippines, Indonesia, which are the areas which you look promising to you here in India?
Well, extremely positive about India is its own domestic market. So is the case in Philippines, so is the case in Indonesia as well. But the Indian ecosystem is much more developed. The legal system is stronger. People are more aspirational now. In Indonesia, you reach almost $2,800 per capita GDP. Philippines is almost there, a little bit higher. China is at $8,000 per capita in terms of GDP. Clearly, India is the place to be where aspirations are catching up, and the demand will flow. I can tell you, there are companies which are at least 4-5 times the size in China in the same level of businesses in terms of consumers, in terms of consumption. I think many of these Indian companies will grow that size, and you just need to be there. You need to be patient. You need to be invested in them to enjoy the fruits of these investments. So by and large, if you ask me, consumption is a major theme for us. We try to do that across the region, across Asia, and whether it's Vietnam, whether it's Philippines, whether it's Indonesia, whether it's China.
Right.
Consumption is remains one. Just a bit, on the policy front in emerging markets, there always is this risk, and that's something which we are apprehensive when we invest.
All right, Pankaj, we leave it at that. Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.